So I was working on a video on a great high quality stock that's really cheap right now. And then Jim Cramer went ahead and beat me to the punch. CNBC, they uploaded this, and it's titled Jim Cramer gives his list of stocks that are still cheap with the market at all-time highs. And there's actually a clip at the end that I want to play that kind of summarizes the whole video, and I think it's spot on.
The answer, forget the craziness. Focus on the cheap stocks that have done nothing and sell for peanuts. They're a lot more plentiful than you might think, even more plentiful than a bushel and a peck of Jim's None Better Sour Dills.
So the new updated plan here is we're going to see what Jim Cramer has to say on this company, and then I'm going to expand upon it with all of my research and my insights. But before I get into that stock, he talks about a lot, and there's one that I disagree with, and I want to go over that one first, and that is Uber.
There are plenty of other big name stocks that have been left behind. I mean, take Uber. Honestly, take Uber. This thing's down 15% for the year. Yet this morning, CEO Dara Khosrowshahi told us on Squawk Box, not on Squawk on the Street, just in case you're wondering, Squawk Box, that business is much better than expected for both ride sharing and delivery. Those are the twins, okay? The only problem is that there aren't enough drivers.
So I'm going to go ahead and take issue with his Uber pick, and it's not because it didn't have a pullback. It definitely did. It's not at an all-time high, which is usually a great sign if you want to invest in high-quality companies. The thing is, I don't know if this is a high-quality company. Of course, as a consumer, I like the company, I use it, but in terms of the future and the direction the company is going, I don't think it's going in the right direction, and let me explain why. So in terms of rideshare monthly sales, of course, during the pandemic, both Uber and Lyft took a big nosedive, but they have been recovering. But this isn't the issue. The main issue is the direction management is taking the company, and Cathie Wood has a tweet from December of 2020 that summarizes the issue. So Uber and Lyft stayed private too long and lost the plot. They could have incentivized their drivers to put sensors on their cars and collect data much faster than even Tesla. Autonomous is an AI project. The winners will have the most high-quality data and the best AI expertise. So she's taken issue with Uber and Lyft not focusing enough on autonomous ride-hailing and food delivery. In fact, we can read this. This is from around the same time, December of 2020. And it says Uber is selling its driverless car subsidiary, abandoning a unit that Uber's founder once hailed as critical to the future of the firm. And I and Cathie Wood still believe that this is critical to the future, and they sold it. So essentially, this is how I view both the ride-hailing and the food delivery market. It's very useful, and I think it's going to grow tremendously over time and be a larger and larger part in all of our lives. The thing is, the way the technology is right now, we still need to have humans deliver food and drive other humans around, and that is hugely inefficient and drives up cost immensely. In fact, ARK Invest published this article on autonomous ride-hailing with some data, some graphs, but all I have to do is read the first sentence here. So it says ARK estimated that customers will be able to travel on autonomous ride-hailing platforms for just 25 cents per mile when they reach scale in 2024. This number could change. It could be 2026, 2028, something like that. But the point is, Uber right now is using humans, and that's working, but eventually it's not going to work, and they're not moving in the right direction. If I continue, it says, or less than half the cost of driving a personal car and roughly 1/10 the cost of a taxi. So right there, that proves the point. Once this technology is out and there's Tesla robotaxis, Uber and Lyft are going to struggle immensely to compete. And it's not just with ride hailing, it's also going to be with food delivery. There's lots of companies making robots like this to deliver food. And this is definitely the future in my opinion. You can so see fleets of these autonomous robots delivering food all throughout towns and cities. It's just way more economical than people doing it. And because of that, it's going to become way more widespread thanks to the advances in technology. So Jim, I gotta say I disagree with you on this one, but let's get into the company that I think is the true value right now.
Finally, they're the automakers. These are hard. Stung by the chip shortage and rising raw costs, GM and Ford now traded at around 8 times earnings. I know that may be wildly overvalued if we're going to a recession or if it's peak Chinatown, but I don't think we're going into a recession. And it seems nuts to think that the Fed will create one right as we get another huge COVID outbreak. Forget it, Jim. No, I won't forget it. When it comes to the autos, pretty much every car they get on the lot sells, and sells at full price. There's no discounting out there. No.
So he's talking about the auto industry, and Ford in particular is the company that I think has the best future ahead of itself, and right now, it's super cheap. Let me set the stage, because if you haven't been in the car market lately, you might not be aware of what's going on.
Car buyers and dealers are scrambling from coast to coast. A limited supply of sedans and SUVs is driving prices sky high, and cars are flying off the lots. Here's CBS's Anna Warner.
The lot looks full at this Ford dealership in Walnut Creek, California, but General Manager Cameron Savarani says most of these cars are used. Just a handful are new.
Your stock of new cars is not going to fill this lot, is it?
Correct, it's not.
Which is amazing.
It is. It's definitely something we haven't seen before.
Inventories are depleted and demand outpaced supply in the second quarter this year. The primary cause? Shortages of microchips, batteries, and steel. And buyers are paying more. Average car prices spiked more than $2,000, up over 7% from a year ago.
So the demand for new cars is essentially at an all-time high. People are paying more and they're flying off the lots. And this isn't partly due to a chip shortage, but that is coming to an end. But the main takeaway is just the strong, persistent demand in the market right now. And Ford as a company, I think, has such a bright future. It's not going to be one of those legacy automakers that gets left behind in the EV revolution. I think this company is going to be prevalent well into the future because of the direction the company is going, the products they're coming out with. If you look at reviews of their products, people are loving the latest products from Ford. There's tons of EVs, even budget hybrids. The new Maverick is a pickup truck. It costs $20,000 brand new and gets 40 mpg. In fact, you know what? To set the tone, montage.
This is the new Ford Bronco, and it's the hottest SUV of the year by far. Everyone can't wait to see the new Bronco, to drive the new Bronco, to buy the new Bronco. Dealers have huge waiting lists, and Ford can't build them fast enough.
And I've got you an early look at what I'm just going to say is the most important electric vehicle we're going to see all of this year, more than the Cybertruck or the Rivian or the Plaid Model S or anything else that may or may not come out in 2021. It's the electric Ford F-150. The most popular, best-selling vehicle in the US for the last 40 years straight is the Ford F-150. So a new electric version of this flagship, it's a big deal.
How serious is Ford about taking on Tesla? The 100-year-old company has gambled the Mustang brand on the success of its new four-door electric crossover. Have they lost their mind? We put the new Mustang Mach-E to the test.
So quantitatively, people love the products, and that's a great sign for the company. And in the past 12 months, it's gone up 99%. But if we zoom out to 5 years, the stock only moved 13%, meaning it's pretty cheap. The PE ratio is only 8.5. So that's why, in my opinion, when you look at the strong product line that Ford is churning out, tons of products that people love, EVs, hybrids. I mean, the brand new electric Ford Mustang Mach-E is one of the best-selling vehicles in the US right now. So all that, along with the cheap valuation the stock has right now, only moving up 13% in the past 5 years, I think Ford is potentially a great value right now and could be a great long-term hold. And it's nice to know that Jim Cramer also backs me up on this one. So I'll leave this video linked down below. If you guys enjoyed, definitely leave the video a like, subscribe to the channel, all that YouTube stuff, and I'll see you in the next one.